Hey guys, morning, level 2 here. Alright, let's get into this. We do a quick review of yesterday and get into our trade plan. It is now 7:52 a.m. on the East Coast on the 26th of February, which is Wednesday the 26th. Today's Ash Wednesday. So let's get into this. Let's get through what are the major. Firstly, let's go through what the major news is we're expecting with new release, home sales at 10, crude oil inventories at 10:30 a.m. So that's important to us. Go to the news, more coronavirus stuff going on. So be careful on trading on that side. So let's get into what deviation. This is actually a two deviation that will become important. 3064 will become important. In our opinion today, there is two deviation. One deviation is 3100 with maybe inflective. Right, so let's get into where the buy side or sell side might be. We're looking at the 67s as an entry also. 50 not so much. 50 may come into play but might not. Right, so let's get through what we did yesterday. We were looking for a couple buy points in the market yesterday. This is a 15-minute chart. Let's move 35 minutes. What we did was we were looking at value area low on the open, to get into the market. We got into the market early right here, got the small pop right up here, got a small pop to the upside, and then the market failed. We got in and got out with reasonable amounts of profits, and the only sort of place we buy was 3180. We got our small pop. We know what we were looking for by targeting wise. Got in and got out, didn't buy anything else. On oil we got run over twice. We tried to buy 3090 and then 3060, pulled both triggers, got stopped out of 600, well, two contract loss. We traded two singles by 2.5 contracts equivalent. We traded, so took the loss. We were wrong on the analysis. We are looking at that, and if you were lucky and you got that 5176, would have been very important on the overnights. So make sure you trade small, trade smart on how you're looking to trade the market itself. Right, so we're gonna look at volume, value on what we traded today. You can see where that last swing was. We're looking at this continuous swing to the downside, where we have value, where we have volume. You can see value is spread more or less all over the place. We have a lot of acceptance right here at this 51.55 level. So today news is, well, news coming out is that the building oil is a little bit bigger, so let's take a long-term view of the market. This is the daily, and why I was looking to buy at that 50-60 level for the second test to the downside, why we were a bit bullish, looking for the test for the upside continuation. If you've been watching, you would have seen this is the daily chart before. Let's see, I have my pattern set up. I was looking for why the levels are set up in a certain way. We broke out, so we're looking for the continuation to the downside. Now we have our band built. So our major band is from 49.60 to 49.30, with two major inflection points at 49.41 and 31 in the range. It have a high probability to the top side and bottom side. So 60 to 30 is our kill zone. We will put in bigger kill zone into the market, so we know exactly what we're looking at. In the market. and you can see we kicked off of one already. Expand that so you'll be able to see it clearly. So we're looking for is a retest of the run and contract. So we're using this run and contract as we trigger in, trigger out. Now we know there may be a bit of a difference in the code, which no, this code is correct now. So we're looking to actually get short at this level here. Looking for this node right here at 46. So we want to make sure that we have our stops behind this area here on the open, or just post open. Look for your nodal value right there and look to be short in the market for the continuation if you're so inclined. Now this is not trading advice, so just make sure you are careful of what you're actually doing. A bit smaller than that. This is our kill zone, active kill zone. We know where stops need to be, which is behind this 49.88 level. Make sure look for price action on the market. So, and volume nodes, see there's a low volume node here, but there's a temporary high volume node to the upside. Yeah, this section more or less look like it fulfills exactly what it needed to do, and it's searching for price a lower end. So trade small, trade smart, look for areas you would like to see in the market. We have oil inventories at 10 a.m. as previously stated, so make sure you have your two areas set up here. I wouldn't be streaming too long this morning at all. Probably might just put my thoughts in and look for continuation because I need to take care of some stuff this morning. Right, on the ES side, looking at the long term again. Right, you can see we're looking for this test of that 63, the 63 to 70, 60 to 70 area is the kill zone we're looking at. The upside and any test of this 55 area is the first correction point, second correction point. That's based off what we're looking for. So span that 55 60 area 56 area is very in play. Last night we got off one value area low trade. You can see by the 56 area is that way. We got off this trade overnight right here at 32.31. You can see not activity log, positions. Made our profits on our two contract last night. We know where our risk was, why we took that risk. There is active value low, retest of value low, look for the punch to the upside, retest of the high. Got in, got out, no particular problems with that trade. Looking at cheap possibility today, this is your first area you're looking at, which is your active value area high. And this low node, you can see there's multiple low node inflection points here. When you see low node inflection points, there is possibility of rejection area. Just make sure you know there's a possibility of rejection, not too sure if rejection is coming to that point, and you would always have this 74 area here. And if the reaction does come, we have structure to the upside. We consider yesterday's complete value area to make sure we have value on either side. of the market. So if we do have the recovery day, so we're looking to buy out 60s and 50 60s and 70s, sell 31 60s and 70s in the first instance, and then look for the 74s to 80s in the second instance. We know we're in high volatility environment, so be careful, trade smaller with bigger stops, smaller about the contracts, bigger stops. Make sure you use proper risk management when you execute a trade. That is 50% of the battle. So we'll see how the market reacts on the open and trade what you see, trade small, trade smart. So have a good one, guys. Might be in the comment section on the market forecast, and you just need to take care of some stuff today within the office. So trade small, trade smart, guys. Alright, bye.